Hello and welcome to our webinar on the gender pay gap, what should employers be doing? My name's Liz Timmins, I'm an associate solicitor and I specialise in employment and immigration law at Clark's Legal.
My name is Russell Dan, I'm a solicitor and I specialise in employment law here at Clark's Legal.
So before we get started on this webinar, we'll just set out what we're going to be covering today. Okay, so what are we going to be talking about today? So we're going to be discussing which employers are going to be affected by the new gender pay gap regulations. We'll also cover what affected employers have to do under those regulations, when the regulations come into force and when employers will have to be reporting under those regulations, and most importantly, what should employers be doing now to prepare. So before we get into all that, we just thought we'd briefly discuss what is the gender pay gap. So it's important to say that it's not the same as equal pay. Equal pay is an issue where men and women receive different pay despite doing the same work or work of the same value. The gender pay gap is different. It's simply the difference between the average rate of pay of men and women. So the Office for National Statistics reports that the national gender pay gap is 19.2%. So this means that on average, for every £1 a man earns, a woman earns 80p. The government is committed to reducing this national pay gap. This follows on from the coalition which introduced voluntary reporting through the Think Act report scheme. But although there was hundreds of employers signed up to that scheme, only a handful of employers actually voluntarily reported their gender pay gap. So last year, the government consulted over introducing mandatory gender pay gap reporting, and they published the draft gender pay gap regulations in February 2016. At the same time, they launched a one-month consultation on whether any changes should be made to the draft regulations. The results of this consultation are expected in summer 2016, ahead of the regulations coming into force in October 2016. So you need to be aware that what we're talking about today are the draft regulations. These may change following the consultation, so you need to look out for the final regulations when they're published in the summer.
The first thing to understand then is which employers are affected. Not all employers will be affected by the new regulations. The employers that are affected are those in the private and voluntary sector that employ 250 or more relevant employees, and we'll come on to the definition of that next, on the 30th of April. The second important point about the definition of employer is that it applies to the legal entity employing those employees. Where this is relevant is, for example, where there's a larger employer which may be a number of group companies. There's quite commonly a holding company and a number of subsidiaries, for example, a PLC and a number of limited companies, and there is no need to aggregate across those companies. Each of those legal entities will be defined as a relevant employer, dependent on whether it has 250 or more relevant employees. Finally, just to note that public authorities are excluded from these regulations. It is expected that there will be separate regulations to cover the public sector, but they're not in the scope of these regulations. So the definition of relevant employees: a relevant employee is someone who ordinarily works in Great Britain and whose employment contract is governed by UK laws. In the draft regulations, this includes, of course, employees and also apprentices, but excludes workers and LLP members. The changes which we expect, and these changes are expected to come in probably when the regulations come into force later this year, are that the definition of employee will be widened to include all people who are contracted to do work personally. If this was the case, then this would include workers and contractors who are contracted to do the work themselves. It would, of course, still exclude the genuinely self-employed who are in business for themselves.
Okay, so we'll just cover off in summary what employers are going to need to report, although we'll be covering this in more detail later on. So employers will need to report the mean and median pay gap between their male and female employees, calculated as at the 30th of April each year. So Russell will talk about this in more detail, but employers will need to calculate their mean gross hourly pay for men and the mean gross hourly pay for women and publish the difference. Employers will also need to calculate the median gross hourly pay for men and women, and that's the middle value when all values are ordered numerically. The median is seen as more representative as it excludes very high earners. Controversially, employers will also need to report the difference in the mean bonuses paid to men and women in the period 30th of April 2016 to the end of March 2017. Employers will also have to publish the proportion of all of their male employees and the proportion of all of their female employees who received a bonus. Finally, to give some context, employers will need to state the number of men and women in the employer's 4 pay bands to see the spread of men and women across the pay grades. So what do you mean by pay? So to calculate the mean and median pay gap, employers will first need to calculate each employee's gross hourly pay as at the 30th of April each year. So to do this, you'll need to look at the pay period in which the 30th of April falls, be this monthly or weekly. So what's included in pay? There is a non-exhaustive definition in the draft regulations, and that includes all the elements on this slide. So basic pay, paid leave, maternity pay, sick pay, area allowances, shift premium, bonus pay, which I'll go on to, and other pay. And other pay is defined as including car allowance, on-call and standby allowance, clothing and first aider allowance. So the definition of bonus pay in the regulations is payments received and earned in relation to profit sharing, productivity, performance and other bonus or incentive pay, piecework and commission. Bonus is also defined as including long-term incentive plans and the cash equivalent value of shares. So if your relevant employees receive or earn any of these payments in the pay period in which the 30th of April falls, then these payments must be included in the calculation of their gross hourly pay. Calculating the value of the last 2 bonus payments may be problematic for employers. For example, do you value an LTIP at the date of award or on the vesting date? And how do you value the shares in private companies? We're hoping that the final regulations will be clearer and the guidance that will accompany the regulations will have clear worked examples and also some tricky examples that can assist employers in doing these calculations. And finally, just to flag, you need to calculate pay using the gross figure. So that's before PAYE deductions, national insurance contributions, student loan, pension and so on. The definition of pay in the regulations also says that what isn't included in pay. So overtime pay isn't included when you're calculating your gross hourly pay, so that's in line with the definition used by the Office for National Statistics. You also exclude any expenses payments and the value of salary sacrifice schemes, so you base your calculation on the employee's salary once the deduction has been made. You also exclude the value of any benefits in kind that the employee is entitled to, any redundancy pay they receive in the pay period, any arrears of pay and any tax credits as well.
The calculations of what to report and how to report it are set out in the regulations. It looks very dry, but it is actually quite straightforward. The first one is the difference in mean pay, and this is mean gross hourly pay. To calculate the difference between the mean gross hourly pay for men and for women is the first calculation you can see on this slide. By mean gross hourly pay, what is meant, for example, for men, is that you take the total gross hourly pay for all men employed, then divide it by the number of men employed. Let's say, for the sake of an example, that the mean gross hourly pay for men is £10 per hour, and calculated in the same way, the mean gross hourly pay for women is £8 per hour. So 10 would be figure A and 8 would be figure B. 10 minus 8 is 2. 2 divided by 10 is 2/10, times by 100 is 20%, and that would mean a difference in mean pay for men and women of 20%. As Liz mentioned earlier, you also need to report the difference in median pay, and again this is gross hourly pay, and the way to get the median gross hourly figure is to look at all of the gross hourly pay figures for men and also for women, and for each one the median is the middle value when all values are ordered numerically. Again, in this example, let's say that the median gross hourly pay for men is £10 per hour and the median gross hourly pay for women is £9 per hour. So figure C is 10 and figure D is 9. 10 minus 9 is 1. 1 divided by 10 is 1/10. Times by 100 is 10%. So the difference in median pay between the genders would be 10% in that example. The next thing that needs to be reported is the difference in mean bonus pay paid in the previous 12 months. Again, this is calculated by taking the total bonus paid to men, dividing it by the number of men who received that bonus to give us figure E, and then the same thing for figure F for women. Again, for example, let's say the mean bonus pay paid to men for an employer was £20,000 and the mean bonus pay paid to women was £19,000. That would give a gap in mean bonus pay of 5%. The next thing to report is the percentage of all men and all women employed who received a bonus. So for example, if an employer employs 400 employees equally split between men and women, so you have 200 male employees and 200 female employees. If 20 of the 200 male employees receive a bonus, that's 10%, and if 10 of the 200 female employees receive a bonus, that's 5%. So those two percentage figures would need to be reported.
Okay, and lastly, there's been some confusion over the meaning of this reporting requirement, but our understanding is that employers will need to calculate their 4 pay quartiles and report the number of men and women in each, and you'll do this by taking the lowest gross hourly pay figure in the organisation and the highest hourly pay figure to identify your overall pay range, and then you split this into 4 quartiles. So the regulations state that quartile A should be the lowest pay to the first quartile, B is the first to the second quartile, C is the second to the third, and D is the third quartile to the highest pay. And then you'll need to report on the number of men and women in each quartile. So to take a really simple example, if your lowest hourly rate in your organisation is £10 an hour and your highest hourly rate is £50 an hour, then you'll have quartiles of £10 each. So band A will be £10 to £19.99 an hour, B will be £20 to £29.99 an hour, C will be £30 to £39.99 an hour, and band D will be £40 to £50 an hour, and then you'll need to report on the number of men and women who fall within each of those pay bands.
Where the information has to be published is also set out in the regulations. It has to be published on the affected employer's own website for at least 3 years. The regulations stipulate that it has to be published in English and in a way that's accessible to all employees and the public. It will also have to be uploaded to a government website. This website will be designated when the regulations come into force. In addition to publishing the information, it has to be accompanied by a written statement that reports that the information is accurate, and this statement must be signed by a director or equivalent. Finally, an explanatory statement is not mandatory, but it is encouraged. This means that an employer is free just to report the bald figures, but the government is encouraging that employers, where possible, do include information which explains why the figures are the way they are, or gives a rationale for how decisions have been come to.
Okay, so when is all this going to be taking place? So as you can see from the timeline, the brief consultation on what changes should be made to the draft regulations closed in March, and we're waiting for the government's response, and this is expected in summer 2016. We can't be any more precise than that. What we do know is the regulations will come into force in October this year, but employers won't need to take any action straight away. So 30th of April 2017 is the date that matters for looking at your median and mean pay. So as we've mentioned, you need to calculate the mean and median pay gap based on the pay data from this date. We've also marked the 30th of April 2016 on the timeline as any bonus payments paid between this date and the 30th of April 2017 will be taken into account when you calculate your bonus pay gap, as this is based on bonuses paid over the 12 months before the 30th of April 2017. Finally, we've marked the 30th of April 2018 as this is the last date on which employers can publish their gender pay gap data. You can choose when you want to publish this, but it must be published between the 30th of April 2017 and the 30th of April 2018. The 30th of April 2018 is also the date employers will need to look at their pay gap again and calculate their 2018 gender pay gap, and you'll have to publish your data by the 30th of April 2019.
It's important to note what the sanctions intended are for failure to comply. The first bullet point states quite clearly there is no sanction for failure to comply. There is no penalty, no fine, for example. So these are regulations which are mandatory, but if an employer doesn't comply with them, then no consequences directly flow from that. However, the government has indicated that it may publish league tables and or examples of good practice. It's reasonable to expect that examples of good practice would be examples where the full data is published and there is a explanatory narrative that goes along with it. It's also been suggested that the government may name and shame those employers known not to have complied. This would be those employers who simply haven't published the data at all. It has to be said that these are the current state of the regulations. This compliance section is not expected to change in the regulations when they come into force, but it is possible that it may change in the future.
So what should you be doing now? So as we've mentioned, employers don't need to publish their gender pay gap until the 20th of April 2018. That's the last date that you can do so to be compliant under the regulations. However, we do recommend that employers start looking at this now. I think being forewarned is most definitely being forearmed in this case. So the first thing to check is, will you be caught by the regulations? Do you employ 250 or more staff? If so, we recommend that you carry out the gender pay gap analysis now to see what your gender pay gap is. You might want to take legal advice when you do this, as it will mean that your analysis will be protected by legal privilege and so won't be disclosed later if there is a claim. And if you'd like any help with this, then feel free to get in touch with us. Once you've carried out your analysis, you then have time before the mandatory reporting comes into force to consider what to do with this. So can you correct your gap in any way, or can you explain it? Will you publish an explanatory narrative with your gender pay gap data? And how will you deal with questions from staff or stakeholders, or even the media or other interested parties? You might want to consider taking external communications advice if you don't have a dedicated internal team to deal with these sorts of questions, depending on the potential risk to your reputation. So that's everything we wanted to cover in today's webinar. We've had some questions coming in during it, which we'll answer a couple of those now. So Megan, what questions have we had?
So one we've got in is, are you recommending to clients that they publish a narrative?
I think we definitely are recommending that you publish a narrative. As Russell said, it's not going to be strictly required under the regulations, but we do think that just publishing your gender pay gap data with no explanation is probably not going to be a good idea. It may be that once you've identified what your gender pay gap is, you actually have some really good reasons as to why you have a gender pay gap. So, for example, you might have a number of people on maternity leave, which has meant that your female staff, the average hourly rate is lower, or it might be that more men receive a shift allowance or something like that. So if you can do anything to explain what's caused those differences, and that can only be a good thing, because it will mean that hopefully employees may not be challenging the difference and sort of and coming to you for answers, or even potentially coming to you asking about, you know, equal pay claims, for example. And I think as well, even if you don't have a particular reason as to why you've got that gender pay gap, the narrative is also a good chance for you to explain what you're going to be doing to address that gender pay gap. So really, in the spirit of the regulations, it's all about not just identifying what your gender pay gap is, but also ways that you can actually try to reduce that. So that's really a good use of the narrative as well.
Okay. Another one we've got in is, do you think the government will enforce the regime in the future?
I can answer this one. In the future, well, we've seen what the current enforcement regime is, and it's firstly worth repeating that there is no unlawfulness in the fact that there may be a gender pay gap. It's not, that isn't in itself an indicator that there's any unequal pay in terms of equal pay law or discriminatory conduct that relates to pay. We can see that these regulations have come in because the voluntary reporting didn't take off in the way that it perhaps was expected to do. So it's realistic to expect that the government could enforce the reporting of the information which is set out in these regulations, or the regulations as they are in the final version. There's nothing on the political horizon, certainly under the current government, to suggest that there will be any offences or unlawful acts associated with gaps in gender pay as there may turn out to be, but it's realistic to think that they will, if companies simply don't report on a large scale, likely bring in some kind of fine for failure to comply with the reporting requirements.
And how much do you think the draft regulations will change following the consultation?
Well, I mean, that's the big question, and we don't know for certain, but I've certainly been to various talks recently with barristers and other lawyers who've spoken to the Government Equality Office, who was doing the consultation. And I think the strong indication is that certainly the definition of relevant employee is going to change, because we are expecting that to be wider than it was drafted in the draft regulation. So we expect that it will actually change to include workers and LLP members and contractors who perform their work personally. So that's the same as the definition in the Equality Act. So I think when you're looking at whether you're going to be impacted, if you're looking at how many employees you've got, you should be including any casual workers and those sorts of employees in your figures. There's also been talk about, hopefully, the definition of pay being a bit tidied up and a bit clearer, and certainly for the guidance to be a lot clearer, because that's going to be quite a job for employers to work out what their gross hourly pay is as it's drafted. And also potentially for when you have to report on the proportion of people who received a bonus, that might change to people who are entitled to a bonus. So we'll see if those changes come in. But certainly, if you keep an eye out, we have our Employment Buddy blogs. We'll certainly be keeping a close eye on this issue. So we'll be letting everybody know what the final regulations look like. So I think that's all we've got time for today. So apologies if we haven't answered your question. We've had a number come in. So what we'll do is drop you an email if we haven't had time to cover what you particularly asked. But as that's all we've got time for, it just leaves me to say thank you very much for listening in, and we'll hope to see you soon.
Thank you.